Okay, this is JJ from Darwin, Australia. When you see, for example, that XLF is bullish but does not fall to the low end of the risk range, how, if at all, do you think about executing a position and then managing it within the process?
Well, that's a FOMO question, right? That means that you didn't buy it when it was at the low end of the range, and we did that last month. So yeah, or you're a new subscriber, which is fine. But it's pretty typical that people say, "Oh man, these are really good calls that Hedgeye's had. Maybe I should buy it." But it doesn't go down, and it just doesn't go down. Well, it doesn't. The market doesn't care about your position. You know, if you miss buying it when I signal buy in financials, you missed it, right? It's not like it hasn't corrected towards low end of the range. That question is born solely out of the fact that financials, like bond yields, have basically gone vertical in the last week, and financials have gone vertical because bond yields have gone vertical. So, you know, on the why, if you really need to know why, that's why. Same thing with the yield curve widening out on 10s2s to a new cycle high. So you have to have patience. If you don't have patience, you will pay the price for that. That you will pay, and your education will be born out of your lack of patience. That's an important thing for you to consider. If you missed it, you missed it. You get what you get. You don't get upset.
Yeah, actually, you know, I'll give a good example for myself. You know, as we've talked about, have issues with FOMO. Historically, I've really chased things, then gotten crushed. But where the risk ranges have helped me, and again, we can't trade our stocks, but we can trade ETFs. But where the risk ranges have helped me is to not chase at the top. And I'll use Bitcoin as an example. You know, I was sort of waiting to buy it. I was feeling that FOMO, but, you know, we had this really wide range. And then over the weekend, it basically got really close to the bottom end of the range. I don't think I hit the bottom, but for me, I could see the risk reward, right? You know, we were well off the top end of the range, very near the bottom. To me, that and in a bullish trend. So to me, it was a clear opportunity to buy. And I think how the risk range saved me was from, you know, not chasing the FOMO, which is something historically I've done a lot in my career. So,
well, I'm giggling, not laughing at you, I'm laughing with you, because it's like not everybody has the self-effacing ability to say, like, I'm human, I screwed this up, I have problems with this. Like, everyone should start there. Like, really, especially if you have some crappy, well, no process. Let's just start with that. Like having a moving monkey or some, you know, whatever charting thing. You might feel like a stability of a process, but it really isn't relative to what we're using here. And the fact of the matter is, using Bitcoin, Jones, like I count them because I buy them every time I get that opportunity. But Bitcoin, for example, there have been 4 buy signals low end of the risk range going back to the last week of November. So it's not like the thing doesn't correct. I mean, it's had 4 explicit corrections towards the low end of the range. Like, a lot of people talk about Bitcoin like, well, why wouldn't you hodl? Like, why don't you have patience? Well, that's actually what I'm doing is ultra patient, because what I'm doing is helping you have patience, you know, which is wait for those opportunities. And I think it's unlikely that you get the buying opportunity that you had in the last 48 hours in Bitcoin, just because that's what my model's saying today. But we'll have to see.
Yep. No, exactly. But yeah, and the other point too is, if you don't have to nail the bottom end to buy something or nail the top end to sell something. It's all about kind of within the parameter, right? You know,
incremental, exactly. So you tweeted, I think you said, I'm going to buy 5 Bitcoins. So you don't buy like 25 Bitcoins, you buy 5. But if your plan is to buy 25, you buy them incrementally, right? That's like, I don't know who taught a lot of people, and I am humbled and surprised that a lot of subscribers, new subscribers to Hedgeye, were taught to go all in with one purchase. Like, that's what they do. They don't incrementally trade, average in, average out, feed the ducks. You know, they don't, again, the prune and plant. Like, these are things that are foreign to people. Now, these would not be foreign to anybody, and I mean anybody that runs institutional money. Like, you would never do it that way. And if you did, you wouldn't be running institutional money for very long. So do things incrementally.